All right, guys, I'm recording it, so whoever's late is just late. They'll get it later. So we're gonna start off. You guys can see my screen, right?
Yeah, I can see it.
Okay, cool. So, um, I think we cut off on the last video that I recorded. As I was watching it, I saw that I missed out on some things. But if you actually watch the video, then you already have seen this, and we're just gonna go over it again for the people who are back in here. So the theta is something that you really have to watch out for, especially for the people who love stocks like Tesla. Their theta is huge. So what theta is it's a Greek that's on your stock. So you can find the Greek by scrolling down on your contract to see what the theta is. So we're gonna look at all this stuff, but I'm just gonna talk about it really briefly, and then we're gonna look at um, my portfolio and just look at everything. But I'm just gonna talk about it since I'm here on on my laptop, and then we'll look at my phone screen. So the theta is basically stocks depreciate. Hello. Stocks depreciate over time, and it's because of the theta. So if your theta is huge, your stock price is going to depreciate bigly over time. So theta usually is marked as a negative decimal point. So it could say, usually Tesla, if you're doing a weekly option on Tesla, you may see it say 2.0 and up. And usually, and actually what theta is what you're going to do is times this by 100, because all options is you're buying 100 shares or something, but you're not really going to buy 100 shares. So if you guys already know what that means. So zero point 0.2 times 100 is 200. So you're going to be looking 2.0 times 100 is 200. You're going to be looking at, if you're going to hold Tesla, your contract will depreciate $200 every day that you hold it. So that's a lot. Most contracts, you may see it say negative 0.05. So times 100, that's going to be like $5. So you would rather want to hold a contract like that. Tesla is traded a lot, and they're known to jump high. So that's why their theta is big. Other thetas that I know that are big is Amazon and big name brands that people talk about a lot is when the theta is very high. So another thing to talk about is volatility. This is very huge to watch out for because it's earnings season. Earnings is when every company that's on the stock market has to report earnings. So Amazon is coming up. Their volatility is rising as we speak. So tomorrow, the volatility is probably going to be higher than what it was today. And for sure on Monday, their volatility is going to be high. Volatility is, it's not just called volatility, it's called implied volatility. So the IV is what you hear people usually talking about. When IV is too high, you want to watch out for that because you will get crushed on earnings. Because you will get crushed on earnings. So typically what happens when earning comes, the stock will shoot up after hours or pre-market, depending on when the earnings release. So on Robinhood, if you're trading on Robinhood, you'll scroll down on your stock, you'll scroll down, I'll also show this later, you'll scroll down and it'll show you when their earnings is. So for an example, if you go to Amazon stock, you can see that their earnings is April 30th. So that's next week. Every day you can check and look for yourself, their IV goes up stupid high. High for a stock would be over 100% for me. So right now, typically a stock without earnings trades around 80. A good stock will trade around 80% with good volume. And that's good. You wanna have good volatility because the higher the volatility, the more price movement you can get. But the bad thing about earnings is your IV can crush. So like this happened to me. I played Google's earnings. Actually, it happened a good couple of times, and I don't play earnings anymore. So you have to watch out when you buy a contract. When is earnings? Because you can miss out on earnings. So I think who did good on earnings? Google did good on their last earnings, and I lost on it even though the stock shot up because there was something called an IV crush. So you will see this sometimes. The stock will shoot up, but then you're like, oh my god, how am I like negative all this money when the stock just shot up? It's because the IV crush. Your money also depends on the IV, not just the theta, not just the price increasing, not just the implied volatility. You guys have to think about these things, not just the price changing. You have to think of what's down there on your contract. Scroll down and look at all these Greeks, look at the IV. You have to know what these are before you do a big play, especially with earnings season. Watch out for the IV. If you're not understanding what I'm saying, write it down and go watch more stuff on the IV. Read up on it. It will help you bigly, and it will save you lots of money for this earnings season because there's a lot of earnings being released as we speak. So I think Netflix, did they beat their earnings? Let me see. Netflix beat their earnings, but they went down. So if someone was in, let's say someone got a Netflix contract yesterday and they were thinking it was going to go up, but because the market was going up yesterday, in actuality, they went down because, I don't know, investors were just like, I don't know. Earnings is very tricky. Even though they can beat, the stock will still go down. It's crazy. All right, so watch out for warnings. What I mean by that is, let's type in SPY and the TVIX. So I'll show you this later. I spoke about this in the last video. I used the word indicators. And this is what I'm talking about, SPY and TVIX. These are the indicators I'm talking about. If SPY goes up, then stocks are going down. Then stocks are going up. If the TVIX goes down, then stocks are known to go up. TVIX works on volatility. So the more that the market wants to go up, the TVIX will shoot down. And we'll talk about this later as I show you, because you might want to see it to actually understand what I'm saying. So another thing is profit calculator. I will let me put in the link in the chat so that you guys can pull this up. Options, profit calculator. Okay, so this is a better way to see how much you can profit on a contract. So the last video I showed how I just briefly look at how much I can make off of a contract just by looking at the contract prices on Robinhood. But this is an actual website that you can go to, and it works. It will plug in everything for you, but you have to plug in your strike price, your is requesting to annotate the shared document. Mm-hmm. I don't know why Quintera wants to annotate. Can you hear me?
Yeah, sorry, that was a
Yeah, we
accident.
can hear you.
Okay. Anyway, so for the options profit calculator, you'll have to type in the company. So if it's Amazon, you'll type in AMZN, and then you'll type in your strike price, and you also have to type in you have to select your date, so whatever your strike date is for, and then it will just show you if the price rises to this is how much you may make. It looks weird. I wish it was like better looking and easier to see, but just play around with it. You'll get used to it. Ask me if you have any questions. All right, so stocks go up and down. If you have a for sure contract, don't sell unless you know you can get in lower. Okay, Yes, stocks go up and down. Today was a down day for sure. But if you are losing big time, especially after that quick drop in the SPY because of, in the whole market actually, because of the drug trials not working with Gilead, then you need to like do your risk management. Should I sell for this big loss or should I stay in and wait for it to come back up? Stocks will come back up. Just hold your anxiety and say, fuck it, fuck my portfolio, and just wait. It will come back up if you have a good, profitable company. If you have something that's going down and it doesn't really have a good trend, we're going to talk about trends in a second. You need to just sell. Cut your losses, and wait to get in lower. You can always get in lower. So, for an example, if you bought a contract for, let's use, reasonable numbers. If you bought a contract for $300 and let's say you bought a contract for SPY for $300 and during that trip down, it now says you lost about $200 on SPY. Should you hold that contract? It depends on your expiration date. If your expiration date says the 24th, which is tomorrow, there are plenty of expiration dates that say the 24th, which is tomorrow. Should you hold that? Hell no. Get out of there. Don't hold that. Keep your $100. That is risk management. If your contract ends May 1st, should you get out of that? Possibly hold it because SPY is known to always go back up unless it's tanking or a recession. But it's more. It has a higher probability of going up. You don't want to sell for a loss. Selling for a loss is bad when when the stock will go back up and you're like, dang, I should have just held it. So do your risk management, and it may help to just always make good plays on good profitable companies that will always go up if something happens like that. So let's say you buy a call for a company that's actually trending down. You probably want to get out of there. Okay, so what is the market looking like now? If you guys can see your indicators, if you have SPY on your watch list right now, it's actually down $2 and the TVIX is shooting up $11. The TVIX has gone up almost $100 this past week. I don't know. I think it may be going down for a little while and then it will come back up. So as I said, stocks go up and down. I don't think the market's going to do a straight V. So I would be very careful in these waters. It's going to be very wishy-washy for now, I think. I don't think the market knows where it's going to go, up or down, especially after today. So day trades. Robinhood and a whole bunch of other platforms has a pattern day trade restriction. You can't trade more than 3, I believe, in a week. I forgot. It's been a while since I've had that restriction because you can get away from that restriction if you trade with over 25,000 in your portfolio. So it's within 5 days. Yes. So that's what pattern day trade is. But you can get away with it if you have over 25,000 in it. So I would watch out for that for the new people. Do not sell if you are about to get restricted because then you won't be able to date. Well, it depends. It's another thing with risk management. You have to just work on your risk management. If you're up, let's say you're up like a whole bunch and you want to risk that pattern day trade, just do it. You won't be able to day trade for 90 days, but you went up bigly and you don't want to risk that. Just sell it and wait for 90 days. You'll still be able to trade, but you won't be able to day trade. So you would have to buy the contract the day before and sell it the next day and sell it the next day. Oops, what is that? How do I go down? Okay. So we're going to look at some trends right now to just figure out how you know a stock is going up or down. But let's just look at some lingo here. I really, really, really want you guys to get on StockTwits. I talked about that last video. StockTwits, pull that up. It's an app. It's like a Twitter for stocks. It really helps you with your risk management. You don't think well by yourself. Ask others, look at others' opinions, see what the trend is on that stock. Are other people think it's gonna go up? Let me see. Let me go on StockTwits. Let me look it up. On StockTwits, you'll see a lot of people talking like this. You'll see scalp, swing, TP, BP, hold, long, short, gap, call, put, shares, ER. What's that? Stock twit. Let me type it in. Let me just make sure I'm spelling it right. It's twits, StockTwits. All right, so FOMO is huge. Yesterday, I had huge FOMO and I had a loss, a big loss. And I'll show you this when I get on my phone, show you guys some stocks or whatever. Everyone has losses. You're not always going to have gains. And I'll show you guys my loss. It's very big. It's 3K. So that's where FOMO comes. You have to literally practice your risk management, and every good trader is always going to have some slip ups in their risk management and also down days. If you guys can tell me someone who's gone up every single day, I would be happy to see them. But FOMO is fear of missing out. LOD is low of the day. Price day. HOD is high of the day. ER is earnings report or earnings release. I say earnings release. Shares, you guys know what that is. Put is the stock goes down, call goes up. Gap is empty space where no contracts or shares are traded. So where no contracts or shares are traded, that means the stock will continuously go up or continuously go down because, there's a huge gap in the resistance or support. And I'll show you guys that soon. Short means bearish. That's another word. Bearish means it's going to go down. So short, bearish, down, those are the same. It means the same thing, like a put. Long means I'm holding the stock for a long period of time. You can remember that one. Holding the stock for longer, same thing. BP is buying power. And some people don't use this, but TP is taking profits. Swinging is holding a stock for more than one day. So if you're out of day trade, you're going to have to swing. Scalp is quick day trade. So scalping is for the people who have hella money in their portfolio, they're going to do scalping. And also you'll see a lot of people doing that, trading shares. So that's why usually in the morning, that's where scalpers usually trade and play. They play in the morning. That's why the stocks usually go shoot up, shoot down, shoot up, shoot down in the morning. Those are scalpers. Those are day traders getting their quick gains. If you play with a lot of money, you can make a lot of money in a few seconds. So that's where they play right there. All right, so this right here is what I'm talking about, risk management. If you see this, something is happening. Just get out. Just get out. This is where I got out. The stock did go up a little more. I could have waited, but I was playing with too much. Like I said, I lost 3K today, and I was like, I'm not about to wait to see what happens next. So that's my good risk management. It's still going down. Tomorrow's probably going to go down as well. So this is the rest. I was in Amazon, I was in SPY, and I was holding Chipotle since yesterday. So I was like, I'm not in there. But Chipotle, it went down so much, I'm still holding it. So I'll show you guys my risk management on that. It won't make sense to sell that because I don't have much more to lose, and also the contract ends in May. The ones that I sold, they were ending sooner, and I still had a lot more to lose. So I definitely got rid of those, but held Chipotle. All right, this right here is resistance and support. You want to get in if it breaks resistance. You see this red line here, right here. This is the stock trading at a resistance, and this bottom line right here is its support. If it breaks support, you want to get puts. If it breaks resistance, you want to get calls, and it doesn't know where it's going to go. A good example is Amazon. Amazon broke its record. Literally, it's all-time high, and it doesn't know where it's. Well, okay, it's now trying to show some support line and resistance, but it broke its resistance and it shot up. So that's where I made my good 17K on that. So you want to watch out and see where you can get in and where you know that you can play heavy. You can play heavy on those that break resistance. So that's your good risk management. If you want to get easy trades, find the ones that's breaking resistance and go heavy on it. You'll make a lot of money doing that and knowing how to find these. All right, this right here.
Hey, Nick, can you go up to that? Can you go back up to that screenshot? Where'd you how'd you trend that to get the support and the resistance lines? Like, what is that? Because I didn't see those trend lines in Robinhood.
You don't have these. You don't have these on. Sorry, you don't have these on Robinhood. I think they're on. You can. I don't think they're on any platform actually. You have to buy into this. But as you get good, you can see it almost with your eyes. If you just know how to do it, you can trade easier and smarter. So I didn't even use a website or a platform to see if Amazon was breaking out. It was clearly breaking resistance, so I just got in. But you can pay for a platform to type in. You can type in your stocks and see. And it will show you lines, but it will look very, very weird. Let me see if I don't have one on here. It will look very weird. You'll have to learn how to use your platform. I would say YouTube your platform to see how to work it. You can win big by knowing your supports and resistance of your stocks. So yeah, here's another one. This is a trend line. So when I talk about it's trending upwards, this is clearly trending up. As you can see, it started down here and it has support. This trend line is actually its support. Supports, you can say that this would be a support line as well. You can just look at it and see that this is support. This may be support as well. It definitely broke, resistance. It definitely broke it right here. So you would get in heavy if it breaks like right here. And this right here is called a flag. There's more trends that you can look at, but I'm giving you the basics. But this right here is called a flag. If it would have shot up, you would then get in heavy as well. But it shot down, so you get puts. It's a lot of trends that you can see. These are easy trends that you can remember though. Like the trends, the people who really work on trends are people who trade Forex. I don't really like trends. I hate them. I don't have a platform. I just remember the easy ones and know when a company is doing well and know when I should go in heavy. So the only thing that you really need to know is the trend lines. Is it trending up or is it trending down? And you need to know support and resistance. So remember, this could be support. This could be support. And this is definitely resistance. As you can see, it's breaking out. You will go in heavy here. All right, here's another one.
And you said you do which ones for support and resistance? You said you do which ones, like between the call and the put?
Okay, so for support, the support line you can think of as a floor. If it's going to break through the floor, you want to get puts. So your floor, your grounds support you. If it breaks through the floor, you want puts because it's going to go down. So the other term is resistance. It's resisting going higher. So if the stock breaks its resistance, you want to go in super heavy because you don't know where it's going to go. Like all this right here, you wouldn't even see this. This wouldn't be here. We're talking about this line right here. If it breaks its resistance, it's going to shoot up and it doesn't know where it's going to end. There's no support line. There's no resistance line. It's just shooting to the sky. So you'll go in heavy here.
So, Janae,
Yeah.
Janae, how do you determine like since the lines aren't there, how do you know if it's breaking through? Like what are you just by looking at the
So
trended
there's no
graph?
lines here. There's no lines here, but as you can see, this is definitely a resistance straight across here. Can you see my arrow on my computer?
Yes.
Okay. So as you can see,
Okay.
this right here is making a straight line. It's definitely a resistance. And this right here, it trended upwards as it always would. This is 100% play right here. Unless something crazy happens in the market, this is 100% play. You can always go in super heavy. If it breaks resistance, it's gonna shoot up. So this would be like a resistance line right here. This may be one. Yes, this is definitely one because like this is like a. If you can make a line with your eyes, like this right here does not make a line. This right here does not make a line, but like this makes a line. This definitely makes a line.
What time frame do you normally look at?
What?
What time frame are you usually looking at? Like a year, a month, or what's the time frame that you're looking at to judge what the resistance line is?
I look at all of them. So if I want to see how it's looking like for 1 year out, 5 year out, I always want to get in the good ones. So I look at the 1 year and the 5 year to see if I want to trade until April or July or something like that. You don't want to get into a stock and trade for and have an option that ends in April or something like that if it's trending downwards on the 1 year or the 5 year. You get what I'm saying? So look at the trend line and see if it's looking like this. If it looks like this, it's very doable to hold a contract that ends in May if your 1 year or 5 year looks like this. If it looks like this, do I have a down one? If it looks like this for the 1 year and the 5 year, no, definitely not. It's not going anywhere. This is another resistance line. Can you see this? These three tops right here. If this were to break tomorrow during the day, I would expect all of you guys to go in super heavy on whatever the stock would be because it's just going to go higher and higher all the way up. But I would not get in on something like this on a contract that ends months away. If you're doing like a day trade or if it breaks resistance, I would still do something that ends soon. So something that ends this month, not far out, because the actual trend is not up. It's down or it's steady. And you don't want a steady trend because remember the Theta, remember the IV, your contract is going to die off. You can't just thinking, oh, it may go up. It's not going to go up. It's not going to go up. All right, here's another example. Here's some supports. You see this at the bottom right here? It's definitely holding support. This is a good thing to get in. It would be I would get in this. I would get in this and then I would be getting out if it breaks.
Hey, hold on. Can somebody mute their mics? Can somebody mute their mic? It's too much feedback. Can somebody mute their microphone?
Okay. Thanks, Shmo. All right. What was I saying? So I would, if this is holding support, we're not looking at this over here. We're just thinking like we're in February or March or April. So if I see a stock is continuously uptrending and its support is up and it continuously breaks its resistance, this is a break in resistance right here. You would give in heavy right here. You would get in here. This looks almost like a resistance break. You would get in here, but definitely the support looks good. I would get in like March, April. Where would I get out? You would get out when it starts breaking its support line, as you can see with your eyes. If this blue line was not here, I would think that the support is breaking right here. You guys can see this with your eyes now, hopefully. If you can't, just let me know. I can do some more examples. You would get out here, and hopefully you have a gain, and you didn't get in late and are selling for a loss. But you would definitely want to sell for a loss if it breaks your support, depending on how it's trending for the whole year or something like that. This would be like the coronavirus. So let's say you have you went in heavy in like February, March, or even April, and it's like down here somewhere, and you're negative like 1,000, but it's like a good stock like Amazon or something like that. Should you hold it? Definitely hold it. Don't sell for a loss. Just buy more contracts, do something else, hold that contract. It's gonna go up soon. Stocks don't go to zero. It's gonna go back up. All right, and that.
Sorry, I just had a quick question.
Yeah.
About that graph. If you can hear me.
Mm-hmm.
So, with your resistance and you drawing that line for that resistance, I guess I'd personally ask, when would you feel like, let's say this wasn't a strong stock like Amazon, would you feel like you would get out around May? Because that resistance line only gets touched once in May, and I feel like you wouldn't get out the first sign of it touching that line, right?
Yeah.
Like you'd have to wait a little bit longer.
If it's a good stock, if it's a bad stock, you would have to think of how you're trading for the day. So if it's a bad stock and it definitely breaks its support line, I would get out. But if it's a good stock like Amazon or others, then I would probably hold it depending on how much you're losing, because you can always get in lower. But if you catch that it's breaking your support, let's say you're like busy for the day and you only have like $100 equity left on that contract, you should definitely hold that, because Amazon will go back up. Don't suffer a loss. Am I answering your question? I feel like I'm repeating myself.
Yeah, no, I put myself back on mute to listen to your answer.
Okay. Are there any more questions? I'm trying to think of what else to talk about. Feel free to ask questions, especially if you haven't watched the first video.
I had a question real quick. So when you're looking at the resistance and you're determining if it's broken or not, do you look at the daily view or do you look at which view do you look at? Do you look at the trend for the stock or option?
It depends on what your contract is. So if you want to day trade it, you're gonna look at the 1 day. If you are about to get in, the echo. Can you guys mute your mics? Okay. Let's talk about if you're about to get in, because you want to know what stock you want to get in that's about to break resistance. So I got in Chipotle after I realized the market was doing so good yesterday, and I had complete FOMO, and I got in because I looked at it and I was like, oh my God, it's about to break resistance. And I was just like, let me just get in now. But in actuality, you want to get in after it's broken resistance, because that's a for sure that it's going to go up. And I just broke my whole goal on slip ups, and I did that. But you want to look at the day, you want to look at the week, and you want to look at the month. You want to look at everything. You want to scalp everything. But to actually know if it's breaking resistance, especially for during this coronavirus, you want to look at the 1 year. So take a look at your stocks right now. Oh, you probably can't because you're on your phone. Let me see. Hold on. Let me call into this. And I'm going to show you guys my portfolio. Just hang on 1 second. Uh, well, while I'm doing that, does anybody have any other questions? Oh, let me look at the chat. What top 5 companies do you recommend trading options with? Um, hold on, I can't do both. I definitely recommend SPY is good. SPY is the indicator I was talking about. You guys can trade that. Especially if you think the market's going up, why not trade SPY? Um, that's good. And so is I love Amazon, but Amazon is pretty expensive right now. And also it broke its resistance, so who knows where it's going. It's trying to make a support, but I'm still watching. Um, what else is good? NVDA, they have a good uptrend. Roku, Netflix, they also beat their earnings. Investors jumped out, but they're gonna get back in. What else is good? What's the meeting? How do you determine whether?
I have a question.
Yes.
Just real quick. So, like, when you're determining what option to buy or not, in your analysis, do you? So I've heard like different reasons. Do you go with the trend of the market? I mean, a stock, or do you normally go with like company news or what's something that's been released recently, or what's your approach? I guess.
Um,
Um,
I do both. But sometimes a company doesn't really move with their news unless it's huge. So, like today, Gilead said that their drug trials weren't really working. They're still working with it, but it's not as they expected. So, they tanked. So you want to look at news like that that's very big and it's very worldwide, and everyone's looking at that. Another thing is, especially with Tesla, people love Tesla. People look at Tesla. People breathe and eat Tesla. If Tesla has good news, of course the stock's going to shoot up like $100 overnight, or shoot down, depending on what the news is. So if it's a big company, I definitely go with news. If it's like a whatever company, the stock may not even move like that. So you want to just know what company you're looking at and trying to get into. Oil, if something huge comes out with oil, I'm still looking on what oil company I want to get back in. I was just talking with someone else today who I trade with. They Oil's tanking right now because everyone's sitting in the house. I can't remember the last time I filled up my car, and I'm sure all of you can't remember the last time you filled up your car either. So there's the oil is just sitting there, and they're actually paying people to stash this oil um, places because it's too much, and so oil is getting cheaper. Oil is tanking. And that's also causing the market to go down. And this is why Trump and all governors are trying to push us back into working and getting out of our houses and starting the economy back up again. Because in actuality, if the market tanks and oil and everything else tanks, what exactly are we as an economy? So all governors and Trump and everything, and everyone is trying to put us back into work and get the market back moving and get us to use oil. So anyways, I'm trying to find the best oil company that's going to do really good, because once they announce that, actually once every state announces that we're back up and running, I'm actually going to get going heavy on some oil. I just don't know which one. But it all depends on what company you're thinking about for as far as news. So if it's like Taco Bell and they have good news, would you get in that? Probably not. So it just depends on what stock. Let me go. I need to actually get the meeting number and password. Give me 1 second because I'm still sharing my screen. Okay, my Wi-Fi must be sucking. My phone is not connecting. So I can't show my stocks. I wanted to show some other stuff to talk about more. But I think these trends will help anyway. I was just gonna show some actual stocks, some trend lines to show some more examples. But if you guys understand it, then there's really no need to. Let me just see if there's more questions. Can you type your questions if you have any? How do you determine whether to buy close to in the money versus out of the money with some time on the contract? Sorry. With some time on the contract, as in buying a contract that ends in, are we in April? Yes. As in a contract that ends, oh my God, we're almost in May. As in a contract that ends in like July, I always buy out of the money ones for the ones that are going to get there because of you make the most money like that, and it's also cheap. Well, it depends on what stock you're working with. You make the most money if you do something that's out of the money, but you have to look at what the trend on your stock. So as I showed in the first video, how you can tell how much you're going to make on a contract. You can also get that option profit calculator. I think there's more new people, so I'm going to type it again. I don't think anyone can get options profit calculator. You can also type that in and see how much more money you're going to make. I always do plays that make me the most money. So if I see that, okay, if I do a July contract and I buy something in the money and it only moves for it to only move $10, I only make $500. But if I'm out of the money and I'm sorry, if something that's expiring in July, let's just speak about Amazon. Actually, no, Amazon. If you buy in the money, you make more money. I believe. It just depends on the contract, actually, and the stock. So you have to look at your in the money ones and your out of the money ones. Which one makes the most money? I play with the most money. But if you want to be safe, on the other hand, in the money ones are good, especially if you're trading closer to your expiration date. Even with May, if you guys are buying May contracts, you want to trade closer to in the money or even in the money because it's safer to sell. If you're far out, let's say you think Chipotle is going to go to 1,000. Um, you want to basically see, am I going to make more money getting a contract out like that or buying something in the money? You want to choose something that's closer to your strike price, 1,000, because you're going to make way more money doing that. And it's also less cheaper contract and less risk. So those contracts would be like, excuse you. Sorry guys. Those contracts would be like $100 rather than buying something that's in the money and closer to expiration. Those contracts are like 3,000. So you have less risk, especially if you already know. You have less risk of losing more money, especially if you know it's going to go to that price. That's why I buy out of the money. I always buy out of the money. I can't remember the last time I bought in the money. They're cheaper. It's less riskier to lose all of your money. To lose a lot of money. You may lose all of your money on any contract you get, but it's cheaper. So it's less risk of damaging your portfolio, especially if you already know it's going to go high. So for me, I'm looking at that Chipotle one because it's on crack, it's on steroids, and everybody's like, WTF? I'm looking at May or June $1,000 calls. They're only like $100. So would you risk that? Definitely. I think everyone should. It depends on what your portfolio is. I'm not telling you to buy that. But if you're trading with like 3K in your portfolio, definitely. Why would you not risk 100 on something that you can make thousands on if it actually reaches 1,000? But if you only have like 200 in your portfolio, that's risk management. Don't go and buy a risky trade to kill half of your portfolio. So like for me, I lost 3K today, but that's only 10% of my portfolio. So it depends on your risk management. Are there any more questions?
Yeah, Janae, I got a question. Can you talk a little bit more about like outside of the resistance and support and some of the trend lines, like what you do to kind of stay abreast with the companies and like, is there a certain thing that you pay attention to as far as news? Is there a certain app? Like how do you just kind of stay, knowledgeable on what's going on outside of, just your favorite companies?
CNBC. I actually watch them on the news. I watch them on TV, and they also have an app. They're on the web.
Did you hear me?
Huh? Can you hear me?
Yeah, I can hear you now.
Okay. CNBC, they're on the your TV. You can like literally watch CNBC instead of watching a movie. They're usually on in the mornings and after the market closes as well. They talk about a lot of stocks. They talk about news, there's also analysts that upgrade price targets for stocks, and you can hear about that on CNBC and also on the app. So typically, close to earnings, there's analysts that upgrade a company's price target. So like right now, Amazon's trading around 2,000, 250, I can't remember, 2,300, but their price target that they just came out with today, I believe, is now 2,900. So you want to keep up to date with a lot of news. CNBC is really good, and I like to watch it live on the TV. I also have the app and with alerts, and I also love StockTwits. If you are someone who likes social media, like me, I'm always on StockTwits, and you can talk to people, chat with people, and they also like give you news as well. If you miss something about a company, they'll have it for sure. And you don't want to just listen to what everybody says. Have them send you proof. Ask them, is there a link to what you're saying? Is there a link to this? Then again, on there they will use the terms bullish or bearish. Bullish means they have calls. Bearish means they have puts, so they think the stock is going down. So those are the only things that I really like to look at. Or you can just go to like the company's website and everything. But I really love CNBC. That's almost the only thing that I ever look at. I don't have all the time in the world to look at everything else. Are there any more questions?
Yeah, I have a question.
Hear me next.
Okay. I have a question. So I noticed just with my month of trading experience that the market, I guess, tends to be more volatile in the mornings and when the market closes for the day.
Yes.
So do you usually, when you sell your options, do you usually sell them in the mornings, like when it jumps up or whatever, or do you kind of like just see how the day goes? Like when do you have like a benchmark of when you sell like 100% off the option, or how do you determine when the actually sell?
I kind of got off track with what you were saying on the last point. Can you say that one more time? Oops, sorry. I was muted, and I got off track with what you were saying at the last statement. Can you say that one more time?
Yeah, I was basically saying like do you trade like in the mornings or when the market closes, or do you have like a certain like benchmark? Like say if you make 100% off your option, is that when you sell you like set like certain things where if you reach this point you're just gonna sell regardless?
If you're talking about those like the limit prices and all of that, I don't have anything that's set. I just look at it myself, and especially in the morning, you don't want those triggered because it's very volatile there. Like as you can see, I think this morning it was very volatile. Or actually the whole day was super volatile, but that's usually what it's like only in the morning. It will shoot up and shoot down in just a matter of 30 seconds. So I usually start trading at like 8 for Houston time, Central time. I usually start trading at like 8:45 a.m. because the market is super volatile at 8:30. I don't know where it's going to go unless if the market's already super high and it's a really good stock. Stocks are known to shoot up super high in the morning on those good days, and so I'll get in then. But that comes with learning like trends and everything on when to get in the morning. I wouldn't suggest trading super early in the morning at right at 8:30 because or having a order set to open at 8:30 a.m. I wouldn't suggest, like, let's say you want to buy something right now. If you try to buy something right now, it will tell you that it won't execute until 8:30 a.m. I don't recommend doing that at all because you don't know what's going to happen to the market tomorrow because it's very, very volatile at 8:30 a.m. I'm going to try to talk about something else really quick, especially after talking about that. Let me see if I can. There we go. Sharing. Guys, I'm trying to get this to show for you. Okay, I'm going to show you how to sell quickly, especially when something happens like that. Just let me put it on this page and then I'm going to show my screen again. Okay. So we're going to talk about two things really quick, and then we will be done, and then we can just take a bit more. So this right here is the SPY I was talking about. I'm going to show you how to sell very quickly, especially during those volatile times. So if you do see that the stock is shooting up at 8:30 in the morning, you want to sell at 8:40 or like around its peak. Typically, stocks sell off at that time. It's very it almost always happens. The stock will sell off or it may just keep shooting up. But you want to just take your gain and walk away, especially if you're trading that early in the morning. But if you're trading in the middle of the day, let's say when SPY tanked today or the market tanked, you want to sell really fast because you don't know what's going to happen. So this is how you do it. So this is your contract page, and this is where you will go when you're about to buy one. So you'll click SPY, you'll click buy down here, and this is what you'll see. This is where you'll type in how many contracts you want to buy, and this is your limit price. So how you sell very fast is you change this. So you will like literally click this and you will type in 3.50 or even lower, 3.45 if you want to sell it even quicker. It will sell in a second. Sometimes when stocks are shooting down, it won't go through and you're going to be losing money by the second. So you want to change this limit price and you want to swipe up and get rid of that thing because it's going to keep tanking, especially at a time like that. And then you could just get in lower. You can do the same thing if a stock is shooting up. So you'll type in your contracts, how many you want, then you'll change your limit price, but you'll buy it higher than where it is so that you can make sure that you get it. Because if it passes your limit price, it won't go through. It will not go through. It's same for when the stock is tanking. If it passes your limit price on the way down, it won't go through. So you want to change it in the direction it's going. So if you're buying a contract that's shooting up and you want to get in on that way up, you need to change your limit price to be higher. So for me, I would change this to 3.57 or something, or even 3.65 to be even certain, especially if it's shooting super fast. Same thing going down. So let's go down here. This is what I was talking about. This is where you'll see your implied volatility. This is where you'll see your theta. So right here, SPY's theta, to hold it for a day, it would cost $43, not 0.43 cents. It will cost $43. Multiply this by 100. These are also important, but the theta to me is very important. As you get more familiar with stocks, just try to learn the rest of the Greeks. But for right now, the theta is what matters, and also the IV. So this IV is really good. You're not gonna have to worry about getting crushed here. It's at 29%. So let's say if it was at 300%, that's bad. You want to get in when the IV is low and sell when the IV is high. So if I got in here and I see it's creeping up to even 100%, I'm gonna sell that sucker because it's gonna go back down, and then you're gonna lose your money. Also volume. You want to trade a contract that has good volume. If this says 0, no one is buying this contract. Don't buy it. It's not gonna sell. You're gonna buy the contract and it won't even be able to sell. Even if it says 10 or 50, you want to be careful with those. If it has good volume, I would say go ahead and buy it. If it says like 100, 500, that's still good volume. This is very high. This is high volume. I would definitely look at this. But this is because if you look up here, this is the contract right here. The strike price is 279. SPY is right now at 277. So that's why this volume is super high. A lot of people are holding this contract, but they may lose their money tomorrow because I think the market's going down tomorrow. That is it. Are there any questions now? Type your questions.
Yes.
Okay, go
I have a question. What 3 tickers could you share with us may go up within the next year, even though we're like in the coronavirus and stuff? Which three should we look at that we could buy contracts that are like a year out?
I would say, let me look at mine because I got rid of some and I missed my low. I'll probably get back in tomorrow on my year outs because I sold for a gain and I was going to get back in lower. And I think I'll get back in tomorrow. So what I might get back in is I liked Facebook's movement and I did really well with that contract. I would get in Facebook. I would get in Netflix. I don't know about Roku because if you look at Roku, Roku doesn't have a good trend for their 5 year or 1 year. Shopify is really good. Amazon definitely is really good, but I would watch out because they broke their resistance. So I would trade short with Amazon. I mean, like um, get in at a low point. So the best low point was actually during this coronavirus. If someone got a year out contract, then it's a perfect contract. I don't know when is the best time to get in now, but for sure those. I'm still looking.
Even the travel industry or something.
I don't really like travel,
No,
especially right
okay.
now because they're not gonna like cruises. I think I heard that the cruise ships aren't even going to be opening back up even after the world opens back up. Is that true? Or I think actually someone said that they had um um a cruise set for October, I think.
Yeah, I heard that, Janae, that especially about Carnival, that Carnival and Royal Caribbean said something about like 2021 is the next time they like letting boats back out in the water. So that's when I like pulled out of my share on that.
Yeah, so that's what I'm saying. So I don't know about the travel industry, and even some clothing industries and food industries. They're just not stable right now, even after we open back up. Like, even if we open back up, do y'all think we're actually gonna stay open? Like, I think some
No,
schools,
especially not by the fall.
yeah, I think some schools are even trying to stay online or do half online, half in school or something like that because no one's certain. So I don't think anything other than tech or online stocks are certain. That's why everything I just mentioned was online or tech. So that's what I recommend for 1 year out and possibly oil. I don't know which oil company yet. I'm still looking for those. Oh, also Google. I didn't mention Google. Google is a good one to get in as well. They're known to recover. Their 5 year looks really, really good. Y'all got money for a 1 year contract. Facebook is actually not too bad. Facebook is a good 1 year. I promise you. Y'all should get in Facebook. And SPY is also good too, but they're pretty pricey for the 1 year. SPY is the indicator. If you have the money and you really think stocks are going to go back, the market's going to go back, definitely get SPY. I'm going to get that tomorrow or the next down day as well. Or when the TVIX starts to go back down is when I will get my 1 years. I got out when it started to trend back up. Okay. Any more questions, guys? Because we're starting to close up. Trying to think if I talked about everything. No questions? All right. Well, this has been recorded. I hope you guys are going to start making money. I'd watch out for tomorrow because it's probably going to be choppy waters like today was as well. I hope.
Hey, Janae, are you going to upload this to your YouTube, like the first video?
Yeah, I'll upload it. And it'll be quicker to upload because I recorded the whole thing. So it's not choppy. And I'll be able to upload it probably today. And then you guys can rewatch it. But that's it. So you guys can log off and you'll get this soon.
Hey.